Hey everyone, I wanted to share some research I put together about how often different asset classes hit an all-time high. And part of what I wanted to do is talk about that in the context of bubbles. So I'm going to share my screen here, my entire screen. And so, as you know, I run this website called bitcoinbubblemyth.com. I posted that to my Facebook page. And one of the premises of that website is bubbles tend to be short. The tulip mania lasted 6 months. The South Sea bubble only lasted 11 months. The Mississippi bubble, 15 months. And things, even the Beanie Baby bubble was really only a year or two, although we gave it credit for 4.5 years in total. And then things like the dot-com bubble and the housing bubble, obviously, those things did have underlying value. They were just temporarily inflated. So what I wanted to do is compare Bitcoin to some other assets, including the Magnificent Seven stocks, and compare how all of that looks as compared to gold and compared to Bitcoin. So I am going to stop sharing my screen real quick here, pull up what I need to show for that, and I'll walk through the fascinating stuff in this chart. Okay, so if we look back at, let me share here. If we look back at the data on the Bitcoin, how often Bitcoin hits an all-time high as compared to, these are the Magnificent Seven stocks: Tesla, Amazon, Apple, Microsoft, Facebook, Google. And then I compared, I threw gold in there. And then also I put NVIDIA on the end. NVIDIA is a Magnificent Seven stock, although its results are sort of stratospheric compared to everything. And that would have been very hard to predict in advance. Okay, so what stands out from a lot of this is Bitcoin is just acting very similar to the highest performing assets of all time. So if you look at it, most of these assets are on a 1 day are setting an all-time high somewhere between 3%, 3 to 4% for these assets. And, you know, the highest would be Microsoft at 10%, but most, or Amazon at 8%, but most of it's sort of 3 to 5% for most of these assets. That the probability of setting an all-time high goes up significantly. It about doubles when you look at whether it's set an all-time high in the previous week. That again goes up significantly for 1 month, again for 2 months, 3 months, 6 months, 1 year, 2 years, 3 years. You can see in the case of Bitcoin, Bitcoin gets close to 100% at the 3-year mark and is a 100% at the 4-year mark. The only reason it dips down to 99.4% for a 5-year rolling average is because Bitcoin's price tends to move on a 4-year cycle. So if you have a 5-year span of time, it includes essentially 2 down years. So for example, a 5-year span of time, if you include 2022 and 2016, instead of 17, 18, 19, or whatever it is, instead of that 4 years catching sort of 3 up years and 1 down year, you end up getting a down year on the front and the back end, which only pulls it down to 99.4% of the time that Bitcoin on a rolling 5-year basis is at an all-time high. And then it's back to 100%. But it's in the same ballpark of a lot of these assets. And you'll see some of these assets, including gold, you never actually get to 100%. And you might have to wait, you know, as long as 9 years. So I want to walk through this chart. So this data was super hard to put together. For each of these assets, I pulled the entire stock performance from July 18 of 2010. So that number is July 18 of 2010, which was the first day that Bitcoin had a price. It was actually trading. So I used that day so that all of the data sets would have exactly the same number of, or the same time span. So they were all intended to encompass the exact time span that Bitcoin had been available and trading. And so that's what I used. I used July 18 of 2010 to the present, literally yesterday. So anyway, so I ran for each of these, and for each of these, I asked ChatGPT how often, based on each of these time frames, starting with 1 day and going up to 10 years, how often each of these assets hit an all-time high on any given day, and only using days for which there was actually enough data to cover it. So for example, it does not compute the 4-year rolling average prior to the first 4 years, because you don't have a full 4 years to do a rolling average on. You have less than enough days to do that. So for each of these time frames, for day 1, it starts on day 1, but for 1 week, it starts on day 8 or day 7, so that you can actually have a full time span. So here's the interesting part. When you graph all of this, which is what this graph is, it's really interesting because all of it is pretty grouped together with the exception here of gold. Gold, painfully, you had to wait as long as 9 years between 2011 and 2020 to get a near 100% probability that you would be up on your investment. And then it went right back down below 100% at the 10-year mark. Whereas all these other assets, if you held them for at least 10 years, you got to the point after a while that if you held them for 10 years, you were guaranteed to be up. Give me 1 second. Okay, so here's what you notice. What you notice with the highest performing of these two assets, other than NVIDIA, now I'm not really counting NVIDIA here because nobody could have predicted AI was going to take off the way it did, and nobody could have predicted that NVIDIA was going to be the recipient of all that investment. So that was just unknowable. I mean, frankly, just unknowable. So these other companies, it would have been possible to say, okay, do I believe internet search is a big deal, or social media, or software, or consumer electronics, or online, markets, or electric cars? Each of these other industries, if you believe the industry was going to be a big deal, each of these companies back in 2010 would have been a logical place to bet. It wasn't like these came out of nowhere. NVIDIA was the exception. They literally came out of nowhere. Nobody expected AI to take off the way it did at the timing it did. And certainly, neither me nor anybody else expected NVIDIA to be the recipient of all that investment. So I put them in as an outlier. So they are one of the Magnificent Seven stocks, but I put them as an outlier on here. And the rest of these are organized from highest performing to less high performing. So the highest performing of these, other than NVIDIA, is Bitcoin at 19,000% growth. And that is Bitcoin right here. So you'll see in the early days, 1 week, 1 year, 1 day, 1 week, 1 month, 2 months, 3 months, 6 months, 1 year, 2 years, etc., up to 2 years, Bitcoin is a little harder to hold than these other assets. Other than just Tesla, it tracks almost exactly with Tesla as far as how hard to hold it is, meaning how often it's hitting all-time highs and how patient you have to be to get all-time highs. These other assets group together, pretty closely. Microsoft is sort of a little bit out of the pack in that it was a little bit more consistent through this time period, but the rest of them group together pretty closely. When you get to the 3-year mark, Microsoft has had a really strong run. So within about 3 years, you've got Bitcoin, Microsoft, and Apple and Google. At about the 3-year mark, all of those are getting close to 100%. Bitcoin takes until year 4 to solidly get there. And then you've got some others like NVIDIA. Interestingly, even though NVIDIA was the best performing of these stocks, you had to hold it for at least 5 years to get to 100% probability that you'd be in the black. That just shows how sort of backloaded their incredible growth has been. And then an asset like Tesla, you had to wait until year 6. So Bitcoin of the Magnificent Seven, sort of how patient you've had to be to set all-time highs, has tracked the closest on this data with Tesla. But instead of reaching 100% at the 4-year mark, like Bitcoin did, which Bitcoin at the 3-year mark is at 97%, but then it gets to the 100% mark at the 4 years. Tesla doesn't get there until the 6-year mark. And this asset right here, Facebook, doesn't get you there until the 8-year mark. So if you held Facebook stock since July 18 of 2010, the day that Bitcoin first started trading with a price, there was a time frame as long as 8 years in there that you would have had to hold Facebook stock in order to be guaranteed that you were up on your investment. And again, in the case of gold, that goes to 9 years. So anyway, fascinating here. But the reason I show you this is because if you could get good data, and I've tried to find it, and it's very hard, and I have not been able to get good data, but if you could get good data for the tulip mania, or the South Sea bubble, or the Mississippi bubble, or the Beanie Baby craze, or anything that's sort of a bubble made of nothing that pops and goes to zero, if you graphed it on this chart, the results would look abysmal. For example, there was no point over a 4-year, 5-year, 6-year, 7-year, 8-year, 9-year, 10-year period where Beanie Babies had a 100% chance of an economic return, or the tulip mania, or the South Sea bubble, or the Mississippi bubble, or any of the bubbles that people put out. There was no period of time over the time with these sort of bubbles that were backed by nothing, where you could get a 100% chance of a return on your investment over a more than, in this case, 14 years of data. Bitcoin's been around between 15 and a half and 16 years, but we only have good price data for about 14.2 years. So almost all of this data is based on about 14.2 years of data, which is July 18 of 2010 until the present. So all that to say, if you're wondering, is Bitcoin behaving just like all these other incredibly high-performing assets, literally these 7 best high-performing assets? The answer is yes. It's right in the same league, right closest to Tesla. And with the benefit that once Bitcoin gets to the 4-year mark, it actually gets to 100, significantly ahead of a lot of these other assets. So in the case of Bitcoin, Bitcoin at the 4-year mark gets to 100%. Tesla only gets to 94.5%. Amazon does get to 100%. Apple gets close. Microsoft does get there. Facebook does not. Facebook takes all the way until year 8 to get to 100% chance of a return on your investment. Google takes until year 9 to be guaranteed 100% chance on your investment. Gold, you got to wait as long as up to 9 years to get a guaranteed 100% up on your investment. And NVIDIA doesn't get there until year 8. But obviously, the recent stock performance has resulted in insane upside, even so. So anyway, that's what the chart looks like. I thought this was interesting. One more data point to say Bitcoin's not a bubble. It doesn't behave like a bubble. It's behaving just like these high-performing stocks. In the near term, you got to be slightly more patient with Bitcoin in the time frame of, let's call it, I guess if we were, let's call it the time frame of, 1 month to 2 years. It's a little bit more, you got to be a little bit more patient than some of these other assets. It hits an all-time high a little less frequently than some of these other assets. But once you get to the 4-year mark, Bitcoin has a 100% chance of being up over any 4-year time period. And again, look at these results. So not only is it in the same league as far as how patient you have to be for a return on your investment, but the return over the last 10 years, I did not do the return since July 18 of 2010, because you end up with Bitcoin at like a 6 million% return. It's something insane. So I use 10 years because 10 years is common in investing. People use 10 years because it typically spans one recession cycle. In this case, it hasn't, because we haven't had a recession since 2009. But sort of a rolling 10 years is a common time frame in investing to look at returns. So I use 10 years. And in the case of Bitcoin, you have a 19,000% return, and then Tesla 1,400, Amazon 1,000% return, which is 10x, Apple 8x, Microsoft 9x, Facebook 7x, 5x, et cetera, et cetera. So anyway, interesting data. It took sort of weeks to pull the data here and there, an hour here, an hour there. Finally, I pulled all the data together, analyzed it all with ChatGPT, graphed it all out, and it's just another data point that says Bitcoin is behaving like the highest performing assets in the world, as long as you're patient in the near term, but it's actually outperforming all of these assets over the medium and long term, with a much higher upside than any of these assets other than NVIDIA, which obviously has had a insane sort of economic upside. And for people who think, well, I'll just hold gold, well, you might be waiting as long as 9 years holding gold until you're up on your investment, whereas Bitcoin so far has had a guaranteed 100% upside as long as you've been willing to hold it for 4 years. So if you want more of sort of the high level on this, bitcoinbubblemyth.com has that, including the chart of how long other historical bubbles were. And also you can download the actual slide deck on bitcoinbubblemyth.com as well. And if anybody wants this chart of all of this data to double check it, obviously I'd always welcome anybody checking my numbers and checking my data. I checked it a couple different ways to try to make sure I was getting good numbers out of it. But if anybody sees a flaw in any of this and wants to run my numbers a different way or double check, I can give you the raw data to do all of that. Happy to provide that if anybody wants to check all my numbers. And again, just this is the sort of stuff I do for fun sometimes, is crunch a bunch of numbers in Excel and see if Bitcoin looks, if it looks like an alien or if it looks like a person. Is this something crazy that looks like a bubble, or is this something that looks like the highest performing assets, the rest of the highest performing assets in the world? And the answer is it looks just like one of the highest performing assets in the world. It just happens to be radically outperforming those highest performing assets. So figured I'd share, see if anybody thought this was interesting. Happy to answer follow-up questions, and have a wonderful day, everyone. Appreciate it. Thanks. Bye.